Hello guys, welcome back to my YouTube channel. In a recent move that has garnered significant attention in the investment world, Michael Burry, a prominent investor, sold his entire portfolio of stocks, a highly unconventional decision. This action has raised questions about his rationale and its implications. As an investor, it's crucial to analyze the context and motivations behind such a decision. Typically, when an investor believes that the stock market is overvalued, they might take one of two common actions. Firstly, they could shift a portion of their portfolio into defensive stocks, which tend to perform well during stock market crashes. Secondly, they might choose to reduce their exposure to stocks by trimming their holdings, moving some funds to cash while maintaining a significant portion invested in the stock market. Michael Burry's recent decision stands out because he took neither of these conventional approaches. Instead, he sold every single one of his stocks, amounting to nearly $200 million. His unconventional move deserves careful consideration and analysis given Burry's history and reputation. Michael Burry became well known for a successful bet against the housing market, which paid off during the 2008 financial crisis. His conviction in that bet was so strong that he risked his career and invested heavily in it, ultimately proving to be correct. This background sets the stage for understanding Burry's recent actions. While Burry has been vocal about his belief that the stock market is overvalued and in a bubble, there was a significant disconnect between his words and his actions. He continued to hold many stocks in his portfolio, some of which may not be considered undervalued or defensive in nature. These holdings included shares in companies like Google, Facebook, and various others that could be vulnerable in the event of a market crash. However, Burry's recent decision to sell all his stocks has brought his actions more in line with his words. This move suggests that he is now putting his money where his mouth is, demonstrating a level of conviction similar to what he displayed during his housing market bet. To understand why Michael Burry made this bold move, we can examine his tweets, as he often uses Twitter to convey his thoughts and insights. In a recent tweet, he mentioned the concept of multiple compression and earnings compression. These terms are crucial to his perspective on the market. Multiple compression refers to the reduction in the price-to-earnings ratio that investors are willing to assign to a stock. In simple terms, it signifies decreasing optimism about a company's future growth prospects. Lower multiples lead to lower stock prices. Earnings compression, on the other hand, occurs when a company's actual earnings decline due to economic factors, which also drives down stock prices. Burry's tweet suggested that he anticipates both multiple compression and earnings compression in the stock market. He mentioned that we might be halfway there, implying that he expects the S&P 500 to fall significantly from its current levels. This is a critical insight into Burry's thinking. Notably, Burry made this tweet on June 30th, which is significant because this date coincides with the deadline for large investors to disclose their portfolio holdings for the previous quarter. Burry's tweet, therefore, may serve as a clue to explain his decision to sell all his stocks during that period. While Burry's prediction of a market crash hasn't materialized as of the making of this video, he likens the current market situation to historical bear market rallies. These rallies involve sharp upward movements in stock prices amid a broader decline. He suggests that these rallies can provide false hope to investors before stock prices continue to fall. It's essential to remember that Burry's actions and predictions are his own, and the market's behavior is influenced by a multitude of factors. Investing decisions should be based on careful analysis, diversification, and a long-term perspective. Additionally, it's worth noting that other prominent investors, such as Warren Buffett, have taken a different stance by investing heavily in stocks during this period, signaling varying viewpoints within the investment community. In conclusion, Michael Burry's decision to sell all his stocks and his subsequent tweets suggest a high level of conviction in his belief that the stock market is overvalued and may experience a significant downturn. While his track record warrants attention, investing decisions should be made carefully, considering various factors and viewpoints within the market. If you enjoyed this video, please like and subscribe to my YouTube channel for more videos.